A US recession is one of the most talked about possibilities as we move deeper into 2026, and it's not just media hype. Rising interest rates, persistent inflation, slowing consumer spending, and tighter credit conditions are all flashing warning signs. These are the same signals that have historically appeared before previous economic downturns. But here's the key insight most investors overlook. Recessions don't just destroy wealth, they also create some of the biggest opportunities to build it. In this video, we're going to break down whether a recession is truly on the horizon and reveal 6 powerful assets that could explode if it happens. So, is a recession actually coming? The honest answer is no one can predict it with certainty, but the economic environment is clearly shifting. When borrowing becomes more expensive, businesses slow down expansion, consumers cut back on spending, and overall economic momentum weakens. We're already seeing stress in housing markets, manufacturing activity, and small business growth. Even the job market, which has been strong, is starting to show early signs of cooling. This combination has often been a precursor to recessionary periods, but instead of reacting with fear, smart investors use this time to position themselves strategically. The first asset that could surge during a recession is gold. For decades, gold has been considered a safe haven asset, and during times of uncertainty, investors naturally move toward it. When confidence in the economy declines and the value of paper currency feels uncertain, gold tends to hold its purchasing power. In a scenario where inflation remains high while economic growth slows, something known as stagflation, gold prices can rise significantly. This makes it a powerful hedge during turbulent times. Next, we have high-quality dividend stocks. While growth stocks often struggle in a slowing economy, dividend-paying companies tend to be far more resilient. These are typically businesses in sectors like utilities, healthcare, and consumer staples, industries that provide essential goods and services. Because of their stable earnings and consistent payouts, investors are drawn to them for reliability and income, which can support their stock prices even during market downturns. The third asset to watch is US Treasury bonds. When uncertainty rises, investors look for safety, and treasuries are considered one of the safest investments globally. During a recession, central banks often respond by cutting interest rates to stimulate the economy. When interest rates fall, bond prices typically rise. This creates a unique opportunity where bonds not only protect capital, but can also generate strong returns during periods of economic stress. The fourth asset is cash and cash equivalents. While cash might seem unexciting compared to other investments, it becomes incredibly valuable in a recession. Having liquidity gives you flexibility and control. It allows you to take advantage of market downturns when high-quality assets are selling at discounted prices. Fifth on the list is defensive real estate. Not all real estate performs equally during a recession, but certain segments can remain strong. Affordable housing, rental properties, and properties located in high-demand areas tend to hold up better. Finally, one of the most powerful opportunities may come from undervalued growth stocks. This might seem counterintuitive, but recessions often create the best buying opportunities for long-term investors. Because when the next recession eventually arrives, and history suggests that it will, the biggest opportunities won't go to those who panic. They'll go to those who planned ahead, stayed patient, and positioned themselves before the rest of the market caught on.